Hi, welcome to Modern Wall Street's Trader Talk. We are unwinding the week like a balance sheet. And here on this Thursday is Matt Cheslock from Virtu Financial. Matt, how you doing?
Awesome.
Well, I'm good, thank you. Thank you for asking. And I have plenty of topics to talk about today. But before we get into that, this just in, Trump will announce more sanctions on North Korea. Are we seeing any reaction in the market yet about this?
Zero. Unfortunately, it's out of sight, out of mind. Until there's a missile launch or something in that regard, we're not seeing any market reaction. We didn't see one on Tuesday when he was at the UN, and he was very, very adamant, very surprisingly stern. We hadn't seen that kind of talk at a UN in a long time, and the market had little to no reaction.
Taking a look, the Qs are getting the blame today. They're down nearly 1%, if not over at this point, the NASDAQ. So what's the point of that?
Well, I think it's a rotation that we've seen, and that's what this market's been held up on. So some of the tech side of it's been getting hit a little bit. And what are they buying? They're going to buy some of the interest rate sensitive financial names, and those are been the beneficiary of this rally over the last day and a half.
All right, well, let's move on to another major story this week. Like you said, the rates. We're going to talk about Janet Yellen. The Fed has decided to unwind the balance sheet, signal a rate hike possibly in December. So after listening to her talk yesterday, will this program be a non-event?
Well, I don't know if it'll be a non-event, but I certainly think that the markets are semi-confused on this. They were very clear on what they were doing, so that wasn't it. The confusion is not in that. The confusion is what they're now looking at going forward 18 months from now, talking about all these rate hikes that they're promising us, yet they can't figure out inflation. They're calling for GDP to come down a little bit 18 months from now. So that is bringing a little bit of pause to this market, thinking, what does the Fed see that we're not seeing, and why are they going to be so aggressive? Is that their aggressiveness mean that they're looking for a chance of a possible recession where they're going to have to start loosening rates again? So that's the question now that we have to defend.
Yes, spot the dots, as we say. That's the new game. That's the new game. But if that's the case, Matt, are we going to see a reversal of this general trend of going long equities, shorten the VIX, shorten the dollar?
Not yet. That would be months out. The Fed has a lot to figure out with possibly 4 positions opening, including the chair. That's going to be important for us to figure out where we go from here. This was a very hawkish statement by them. So, is it a change in philosophy? Can this be maintained, and will it be maintained?
All right, well, now that we got the future covered, let's talk about the present. Since we have a lot of stuff going on in September, we are expecting a tax plan outline. We're also, it looks like they're trying to tackle the Affordable Care Act again. And one of the I love your facial expressions, but one of the constituents I saw there is that could, if it gets passed, it could eliminate taxes on medical devices. Have you by any chance seen activity in this space at all? I'm thinking like the biocigs, et cetera.
You know what? I haven't really noticed that, quite honestly. I know the biotechs have been really strong, and that's been a sector we've seen a lot of money flow into. So again, you talk about the techs being down, the biotechs were weak, going out 9 months, 12 months ago. So they're seeing that money flow at the end of this year. So I haven't really noticed that, to be quite honest. But I think, the fact that we were getting so close to tax reform and tackling that, we had the storms, we had all the stuff going on with North Korea, that kind of derailed a little of that talk. Now we got focused on that, and now we're talking about the Health Care Act again. We seem to be stretching kind of thin. I would love to see the government tackle one of these particular problems, the market to react to it, and I think that would be good, as opposed to being on the periphery of all these different ones.
All right, well, in the meantime, we're going to tackle the weekend since it is Thursday. So, Matt, thank you so much for hanging out with me on the floor, and I hope you have a good one.
Yeah, you too. It's my pleasure to be here.